The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, as we take a look at how the markets settled up on the day Thursday and recap the USDA February WASDE report and everything that was thrown at the trade on the day. Soybeans ended up finding a little bit of green on the screen, plenty of volatility there throughout the session. Corn was quiet, wheat under pressure. Let's talk about things. Joining us for a conversation, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you again and talk with you on a WASDE report day. Man, oh man, USDA's numbers, soybeans, especially on the South American side, I think a lot of folks were expecting a bigger cut. We didn't get it. CONAB gave us a pretty big cut ahead of USDA on Thursday. But I think everything, all the soybean fodder out there really added to the volatility on that side of the market today, didn't it?
Well, it did. And I was going to say the USDA didn't give us the number that people were hoping for and looking for by a total of 3 million metric tons. And so kind of was a bit negative there. The world numbers went up. But CONAB, the equivalent of the USDA in Brazil, they came out with their number. And that was on a supportive tone. That's in that now. You got CONAB now down toward that 150 million metric ton area. And consequently, when you look at that big picture, you got to think that the bean market might be looking at perhaps its max supply out of that southern hemisphere. I was going to say, unless it pulls the United States and somehow manages to find much higher yield after harvest. But to that end, there was some carry-in brought in from last year in Brazil. I believe, I don't have all the numbers memorized, but that was 1.7 million metric tons. That's no sizable small amount to carry in. So still a heavy report, but probably room for the USDA to work their way more closer to the 150 million metric ton mark.
Yeah, down the road, we'll see if USDA works their way there. I know on the U.S. side, they cut soybean exports 35 million bushels. That was a little surprising, but then maybe not considering our pace of soybean demand, Brian. Your thoughts on that?
Yeah, I think we all kind of feared it. We didn't know what the number might be. 35 is a pretty hefty number, and that got added basically right back into the carryout. So the carryout rose from a very snug number several months ago, and it's been just gradually chipped away at either through a little bit higher yield or poor or export expectations. Right now, looking at U.S. carryout at 315 million. Boy, the average pre-report estimate wasn't looking for that big. It was 282 million. So they're again a little heavy. Nice to see the market turn around toward the close. I don't think I'm ready to celebrate yet. Just doesn't have the feel that there was liquidation of longs from speculative shorts. That is, they're short heavy. There may have been some bottom picking and buying here, but it doesn't look like when you finish a couple higher. I know it was lower at one point, but when you finish a couple higher and only about a dime off the low, it just doesn't, to me, resonate as we've turned the corner yet.
On the corn side, not much in the way of newsworthiness, I think, out of this WASDE report. I know ending stocks went up a little bit. The Brazil number got cut to 124 million metric tons from USDA. I know in the case of this corn market, though, here throughout much of the week, we've been setting new contract lows in front month March corn. This corn market is just a little depressing to look at right now, Brian.
It is, and this goes back to late summer where we saw September go off the board around 462, then December went off beneath that, and now March is trading beneath that. And so it's a reflection of something, and really it's a reflection of a lot of things. Kind of the big three just put together is simply that there's concern that China won't necessarily buy as much corn as maybe we thought they might. Their economy's in kind of rough shape, so that's one. Two is, while we do recognize that the Brazilian and Argentine crops combined could be close or lower than last year, you're still not looking at a significant drawdown. And on a side note, kind of interesting today that the Brazil corn crop, the USDA went from 127 in January to 124, 3 million metric tons. And the bean crop, they only lowered 1 million metric ton. If I had to guess beforehand, I would have said it would have been 3 for soybeans and 1 for corn. So go figure. But the last thing is that, I don't know if we've really got a handle on last year's crop yet. It's just such an odd year in that, Jesse, when you see the USDA raise yield in November and again in January, that's crazy. We just don't see that. And that's a reflection of a small crop that, instead of getting smaller, got bigger and bigger and bigger. And one has to wonder what the real crop size is, considering it appears these private crop estimates and boots on the ground, and even the USDA on the ground in October still couldn't quantify the yield. And the price is telling us maybe that there's more out there than before. I really can't put a finger on it. We kind of thought corn 475 area probably was a good support level, then 450. Now it's looking like 425 might be the next target.
Yeah, and that's not something that a lot of folks want to see. If 425, that range is indeed the next target. I want to touch on the wheat trade real quick before we kind of sum up the grains overall. I know wheat was the biggest loser on the day. I'm looking at charts like Minneapolis charts. It looks like we've lost a fair amount of carry in the market there. I know in terms of this wheat trade, though, a lot of it's just going back to a big Russian supply, and world wheat prices really seem to be weighing on all three wheat classes here in the U.S. right now, it seems, Brian.
Yeah, we just continue every week to hear more about Russia lowering price, putting their foot on the gas pedal, and keeping the world active there. And then the other side of this coin too is there was, I think, some support on wheat, all this warm weather, just looking for a cold front. And there was talk of a polar vortex heading south, potentially into the Plain States. It looks like that now is going to not even get to the United States. It stays in Canada probably. So there was that today. Then you got some technical selling today. Just kind of an ugly day. World ending stocks on wheat actually came in less than the market was expecting at 259.4. Not a lot less. Mark was looking for 260.1, but 0.7 of a million metric tons. And so that's not in and of itself, that's not a bearish. But when you get a report like this and the market still heads lower, that's not a great sign. So just a tough day in the wheat market there. Hopefully it'll snap back. I got to be frank, I didn't like today's close at all. That was a weak finish. I'm just worried that market might be on the verge of trying to retest its lows from fall.
Well, Brian, I want to spend a little time here. You are always great at giving us perspective on how these markets are trading, kind of the 1,000-foot view. So in terms of the grains and oilseeds, what do folks need to think about here post-February WASDE moving forward? We're getting closer to spring planting, things like that. I guess to steal your line, big picture perspective here, Brian, what are you seeing in this grain trade right now?
Sure. So I see two things. One, big picture perspective. If you're an end user or a buyer, things are getting appreciably cheap for you quickly. So don't lose sight of that. You've got in corn and soybeans, you've got a big weather event yet in the southern hemisphere to produce big crops. And so there's that, and then there's US weather after that. So I know the market, you can say, cried wolf last year because boy, the drought monitor map and all, so, but still, weather matters. It's important. So if you're a buyer, recognize that sitting on the sidelines has been working, but it's not going to work forever. The second thing is, from grain producers' perspective, there's not a lot of easy answers right now. So I think there's one of two ways you got to kind of be of the mindset, just wait it out. Markets go down, they go up. That's one. The other is just stay at it. What I mean by that, keep trickling grain into the pipeline, keep lightening the load, keep your cash flow coming. If you know how to buy it back, be prepared to buy it back. You could buy futures, you could buy calls. But there's a little bit of method to that madness. We've been encouraging producers to do that since fall. And those sales that didn't all of a sudden look so good in fall or late October, November, when things rallied up, they look pretty good right now. So I'm not arguing that the market's going to bury itself and get worse, but we've all seen strange things happen. And my mind goes back to 2008. We saw $8 corn, and the corn traded under $3 on the board. All in the same window of 4 or 5 months. before it eventually got back into the fours. Just a lot of potential. We're not seeing the managed money move out of these short positions yet. Some weeks a little bit, some weeks they add, but you're not seeing appreciable wholesale short covering, buyback, get long. We haven't seen that yet.
Well, and to that point, until managed money and the funds have a reason to get out of their short positions, it feels like this market's going to continue to kind of be stuck where it's at and trickle its way lower because with those record short positions right now by the funds, they're really seemingly driving these markets, Brian.
Well, it's human nature. People do what works, right? So when things are working, you kind of figure out how to keep doing what's working. So if they've sold the market and it's worked, and then they sold the market again and it's worked, they've been building this position with things that have worked. Today's reports, not that I want to sound too sort of cliche, but it was a permission slip. It was a permission slip to stay short. There was nothing there that said, wow, we need to rethink this. The CONAB number, I thought this morning, that's a kind of we might need to rethink this. We've been talking for months how some of the private estimates were talking maybe into the 150s or low 150s. Well, CONAB's there, and maybe the USDA will get there. Now are we in the 140s, 130s? There again, small crops have a tendency to get smaller. That may be the case here. Pretty good reduction already, though. So if I think about late planted beans and some of the December weather that improved in late December, I'm not ready to throw in the towel that this crop could also score a little bit of a recovery. But suffice it to say, we know it's been documented. The damage has been done to a lot of hectares, and those add up, and that's why the yield estimate for crop estimates, from the USDA's perspective, Jesse, you're talking 9 million metric tons, talking about 8% less in that area. It's probably mostly like 10% less. Yeah.
We are having a conversation today with Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, some thoughts from you in the livestock trade. I spent time last week at the Cattle Industry Convention in Orlando. Feels like there's a little more optimism in the cattle markets here right now. We got a decent day again on Thursday. The WASDE report, pretty much as expected, numbers on beef production and thoughts on slaughter, et cetera. There, your take on this cattle market right now and what you're seeing. Are you in the camp that there's a little more optimism on the beef side right now?
Oh, for sure. There's optimism. You've got a couple of things. You've got an equity market that has just been blowing up since November. Remember, the cattle market tipped over in late September, and so there's optimism in that regard. But that's not going to drive the cattle market so much. It's back to supply. It's back to demand finding a home for higher prices. The charts put in a technical V bottom. We had talked about this late summer, that typically the market sort of has that bottom, maybe more toward late summer, October, and then recover. This time it took a little bit longer, but we're getting that recovery into probably what'll be one of the stronger demand seasons and tighter supply seasons into that April window. So I don't know if we can get back up to the highs. That's pretty extraordinary. We got a long-term trend. You got a lot of money pouring in, but the market has done very well. Technically, a 2/3 retracement here, nice V bottom. Nice when you put a V bottom in, then you look for other things. I see inverted head and shoulders. Those give us upside objectives. All of the contracts have pretty much hit what we thought might be feasible. Now it's whether or not they can kind of extend it. I think that would take some adverse weather to do that.
Hog market a little bit quieter on Thursday, but I think in this case of this hog trade, we've found a decent floor, I think, here. And now maybe we've talked about this before, I think, kind of settling into a new range, it feels like, on the hog side, Brian.
Yeah, it does. It feels like it's selling into a range, and those summer months are still holding good value. So I'll encourage you, if you got hogs, even though we're down a little bit here, well, I should say $4 in a week on like the June contract, but still a high price. We had June pushing the high of 98.35, and back in June we had 98.80. So double topping that chart back off of that. Still good hedging opportunities, trying to find its footing. Cash index price 74.02. February board's getting in line with that. It looks like things are that's a good word. I think they're aligned. The nearbys are aligned with cash, deferred's aligned with expectations for tighter supply, and yet I don't think we're talking about bull markets here. There's big picture perspective that China has reduced their hog herd some. Maybe exports can pick up. We've been running at deficits for Iowa hog producers now for multiple months. I think that in and of itself does curb the herd size down a little bit, but it doesn't curb it down enough, especially with back months at $94, $96 to encourage big liquidation that far out. So I'm still I'm cautiously optimistic, but I don't know if we can do a whole lot better than those summer months are priced right now.
How about the dairy trade? Any notes for us and what's going on in the dairy markets, Brian?
Yeah, a lot of crazy volatility, some quick demand, big push into the cheese market. Some of that comes off the weather in California, that trough of rain again coming into California, parts of Idaho. Cattle, talking to an Idaho producer this morning, some of the operations, a lot of mud, a lot of muck, worries about mastitis, things like that. That'll show up down the road a little bit. But I think the idea of the weather event may already be past the market. It quickly reflected that with a quick surge higher. So I think prices are back to an area where we talked in November, where they seem to be finding some support, and then they fell apart. But this should be an area where they should find support. I just don't know if we can talk about mustering up a whole lot of strength. And when you look at it, 18 in front of all of the months from June and beyond, I think that's going to keep producers, the mindset they can hedge milk here, sell milk here, and at least have that as a pivot point. It just doesn't seem to me that the market's encouraging liquidation. So limited upside again.
Brian, final thoughts. Floor is yours. What do you want folks to take home today, and what do you want to reiterate to folks here after the WASDE report?
Sure. So we had the WASDE report. The WASDE report's done and behind us, and we know some more information. So focus is still on Southern Hemisphere crop conditions and weather for row crops. Just kind of a friendly reminder that, as we know where we are now, but if we look back, a lot of frustration that farmers they didn't sell more, they didn't do. So when opportunity comes and you look at price, remember there's a difference between price and value. So a year ago at this time, when farmers are looking at new crop price, they're focused on that price and comparing it to something else, and that was the old crop, which was quite a bit higher. So it wasn't a really strong incentive when you compare price, but the value was there to get started making sales. So always kind of keep in mind, if you start seeing some value, and I call value things where you can produce something to make a profit, or a buyer can buy corn. There's value for the end user right now. Price might say we could go lower, but the value is there to buy the inventory because you can buy it for less than it costs you to produce it. So that's a bargain. So just kind of keep in mind the difference between value and price. Price is just a point in time. It's always relative to something, but value is relative to what it means for your operation.
Brian, I know folks, if they have questions, they can reach you easily via phone, email, online. How can they get in touch with you, Brian?
I'd like a phone call first, 800-334-9779, and let me listen to and see if I can come up with some solutions to any questions you have. So that would be one. Two would be email. Just shoot me an email. Emails are good. I like them. It's Brian with a Y. So BRYAN @totalfarmmarketing.com, or check out our website, totalfarmmarketing.com.
Brian Doherty, Senior Market Advisor at Total Farm Marketing. Always a pleasure. Thanks for joining us on Market Talk today, Brian. Have a great weekend. We'll talk to you next week.
Yeah, my pleasure. Thank you as well, Jesse.
That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.
If you miss an episode of Market Talk, you can listen back to the show anytime. Just search for Market Talk on your podcast platform of choice, and you can hear past episodes of the program on demand.